The opening prediction fell right into the box that was drawn yesterday, and again, the way how I got this box, the Fibonacci retract from the high to low and ignoring that minute, but responding to what happened yesterday. I forgot yesterday. I don't keep track of those runs, but anyway, it's so the closing box comes out here for yesterday's close, and it did fall within, well, slightly lower, which is better for me because the next day was going to sell off a little bit because it's bearish sentiment. By closing it, basically there was no trade on this day. Well, this is today. When this was the end of the rally yesterday, and then it didn't go above the closing point from the day before, which means it's bearish. Nobody traded. There's no money to be made here. So I was assuming that it'll open lower, and which it did. And the point was when Fibonacci retracts more than 61%, it has a potential to go all the way, retract all the way to the 100%. So I drew the range there, 100%, to the pivot point the next day. And it fell right in there. And then today is basically flat. This is just trading by themselves. And there's one thing to note, that this was it's a little bit off, but the way I got it was between the yesterday's close and the pivot point, which is very tight window. I had it tight because it's flat. Today is very flat, and the reason for this happening, this run, is it was kind of not too risky to play the straddle this day, because over here what happened was somebody bought $106 million worth of SPY right here, and when that amount of that much, look at that, there's 1 million bought. So that's the yeah, this exact amount was where it was bought. Yeah, this is arbitrage, absolutely arbitrage. So when this much is bought, there's no way they are going to lose money. So when that amount is bought, it was going to send it up to where I was guessing, up to the previous high, or it could go up to the trading point, which is, so I have the other direction here. Up to here, the pivot point. This is the call option for whatever price. Like, they graph out all the same. The price doesn't really matter. So up to here, and then it went back. And from here, there's very strange thing happening. There are so many arbitrage going on. Arbitrage is buying it at the same price and selling it at the same price to a different exchange. So it appears that they are selling and buying it at the same price, but it's only because it's only showing up to the cent. But below that, they're actually taking advantage of that slight difference. So if you're trading this much, like 1 million times, that's about close to 500, like $427 million. So even that slight percentage within seconds it's a lot of money, basically. So we can't do that. Only those hedge funds or like banks can do that, and it appears that they were doing that over here. Yeah. So that's the closing, it's a miss by a slightly above. But tomorrow, I think, because that's actually a good news for the closing opening price tomorrow, which is slightly lower than the close. And reason for that is because, well, first of all, the reason why it'll close lower is or open lower tomorrow is because of the mortgage delinquency expectation that it'll have a higher delinquency, so that that'll indicate the housing market not crash but troubles in the housing market because of the mortgage rate going up and the sales are not so good. The inventories are rising. So basically, for that, I think it'll drop, and the reason why it's good to close higher than the expected point is there's a lot more to sell when it comes to the selling time. So the price for closing tomorrow is, the range is 425.73 to 426.46.